We're back with James Katulis, president and co-founder of the Commodity Customer Coalition. He's representing 8,000 people missing their money in the MF Global collapse. He also runs a hedge fund. So he is telling us all of the problems with regulation that are not likely to get fixed and will allow this to continue and possibly be worse. So with this issue, we're talking about rehypothecation. This is allowed. Unlimited amounts of rehypothecation. It's called churning. It's basically opening the door to unlimited leverage. It goes on in the UK because there is no rule against it. Why is there no rule against it is my big question in the UK.
It's an absolutely huge moneymaker, for the UK. It's one of the reasons that London is one of the world's financial centers because, again, every major financial institution is engaging in this practice, and that they're really the one spot you could do it.
So there's really no incentive to stop it because this is the moneymaker.
Right.
Okay, I want to bring up what Zero Hedge says is the cost of it, okay? They say that MF Global is essentially an example, an equivalent example to AIG in 2008 of virtually unlimited leverage via the shadow banking system in which there are practically no hard assets backing the infinite layers of debt created above, and which when finally unwound will create a cataclysmic collapse of all financial institutions. And this is because of this daisy chain of rehypothecation of when that unwinds. So my question to you, MF Global, it's horrible that customers lost money. It wasn't too big to fail. It didn't bring down the system when it went bankrupt. Is there another AIG out there? And how would you even find it if all of this is off balance sheet and unregulated?
Probably. I mean, I think one of the goals, so to speak, of the major financial institutions is to make sure that they take so much risk that, if they win, they're going to win big. But if they lose, they are going to lose so badly that they have to be bailed out. Mm-hmm. And I mean, we've seen this, I think it started in this country, basically in the collapse of long-term capital management, mm-hmm. When they were taking this kind of leverage, and the prime brokers of LTCM were actually mirroring their trades, which is one of the reasons the collapse was so bad, because everybody thought these guys were so smart that the brokers are like, me too. And that meant the ultimate exposure for the financial system was so great. Now, what happened in 2008 was many, many, many multiples bigger for LTCM. And now one thing has changed. We haven't done anything like Dodd-Frank, and its 860 pages does nothing to address the core problem here. And it's the shadow banking system. And 0% interest rates just enable that.
Why do they enable that? How do they enable that?
Because when you actually have to borrow for leverage, mm-hmm. That's creating a market-based restriction on how many times you could lever up. When it's zero, you divide by the interest rate, you've got an infinite product. So. An
infinite product. So this shadow banking system risk is kind of courtesy of the central banking regime.
Yeah, I mean the whole system works together to enable this. I mean that's it's essentially like a drug. I mean banks now lending is not really a priority for them anymore. Yeah. I mean they could borrow from the Fed window at zero. They could take the proceeds from that. They could take their, their customer assets, shift them all to London, and invest 30-to-1 in off-balance sheet derivatives. I mean, I think according to Zero Hedge, J.P. Morgan has over $500 billion in rehypothecation exposure.
Wow. Let's talk a little bit more about Jon Corzine, because if I don't get to this, I'm gonna beat myself up. There have been reports, some sources told Fox News that there may not be a criminal case against it, that there was some maybe shoddy accounting, but it doesn't look like they can really pin him down on anything. My question to you, how is it possible that they could not build a criminal case against Jon Corzine? It's
not possible. If there's political will, there's a case here. I mean, they were transferring. They transferred over $300 million on October 31st outside of MF Global, it looks like, to J.P. Morgan, when they knew a bankruptcy filing was imminent, and they knew there was a shortfall already, and they're still sending money out the door. I mean, if that's not criminal intent, I don't know what is.
But how could he avoid having it pinned on him? I mean, shouldn't you as a CEO be responsible?
damn right you should be responsible and you should be accountable. But we've forgotten those concepts in this country. I mean, any military officer worth his salt knows that you could delegate responsibility, but you could never delegate accountability. But those rules don't apply in our financial system. And Corzine, for example, is Obama's biggest fundraiser.
Yeah.
I mean, he personally contributed $70,000 to this re-election campaign and bundled another $430,000. Obama gave back the 70, but he kept the 430. So one of the things we're doing with the CCC is we're asking Obama to donate that $430,000 to the Legal Defense Fund for clients who are out property.
And real quickly, you mentioned in the break that why the heck is J.P. Morgan and having its hands in all of these pots? Is this a result of having no Glass-Steagall equivalent? That's
right. And I mean, the repeal of Glass-Steagall is an example of the revolving door between Wall Street and Washington. You had Bob Rubin, come over as Treasury Secretary, led the charge to get Glass-Steagall removed, and then went over to the city where he made over $100 million to basically sit there, I mean, as a reward. Mm-hmm. I mean, Glass-Steagall should exist. I mean, banks, their public policy is to hold deposits and to make loans. And if they're going to do that, then you could somewhat justify the bailouts and keeping banks, intact because the functioning economy needs a banking system. Yeah. But if they're going to sit there and borrow at 0% from the Fed, they're going to make loans in very limited circumstances, and instead they're just going to act like a giant hedge fund with customers' money where the customers don't share in the upside and go to London and go 30-to-1 leverage. Why are we propping them up?
Before we go real quick, just yes or no answer. Are your customers going to get their money back, you think?
Damn right they will.
Damn right they will. Well, thank you for being on our show to explain why they should and why there should be a criminal case against John Corzine and why you should be very afraid about the shadow banking system. That was James Catoulis, president and co-founder of Commodity Customer Coalition. All right, before we go, let's lighten it up a little bit. Something a little lighter than your money being rehypothecated over and over and over again, creating unlimited leverage and destruction or the potential for it therein. Let's bring in Dimitri Kofinas you're not in the control room, you're in the studio, and Shannon Donahoe in the control room to talk about these stories, which are actually incendiary on a different level. So, you thought Bank of America debit fees were annoying and a thing of the past because people were so up in arms about them. Well, think again if you are getting a tax return in South Carolina, because unless you state specifically that you want your tax return by check or direct deposit, you'll get a B of A credit card attached with these setbacks.
$2.50 for any withdrawal and an ATM not owned by B of A. $5 if you have to replace it more than once. $10 for taking out cash more than once, and $5 to close your account. We told South.
Okay, evidently the state is doing this to save money. This is BS. Bank of America gets to cash in on people's hard-earned money that they get back in their tax return. This is absurd. Why don't they give this to a community bank?
Beats me.
That's all you had to say, Dimitri?
I mean, this goes on all the time. J.P. Morgan gets to make money off food stamps.
Yeah,
okay?
that's
and Bank of America was third on the list of banks getting money from the Fed's liquidity facilities during 2007 to 2010. It was like over $20 billion a day on average. All right, so it's absurd, man. We talk about it all the time. These guys run a feudal system. They're kleptocrats. All right, you and I can't borrow, but they can freaking take out how much? I mean, it's just crazy.
I just think it's very incendiary how there's no stopping them on any level. They have crept into every single aspect of lives to where they can even, despite all of the angst against them, despite all of the anti-banker sentiment, they can still cash in on just average people's tax returns with $5 here, $10 there, whatever fees to the merchants that you're using them at. Shannon, did you want to add anything?
Go to a credit union and read your tax forms very carefully.
Yeah, I think the real lesson to be learned here is read the fine print everywhere you look, because that's where they're going to screw you. Let's move on to another banker. Jamie Dimon is once again cashing in on attention from being a drama queen, kind of like this.
Armand, Did you see what he just did? Hello, Valley, darling.
What did he do?
He blew a bubble with his gum while I was singing. He can't do that while I'm singing!
Look, this may be
Jamie Dimon reminds us of that character because he just seems like such a drama queen, okay? He's, of course, the CEO of JP Morgan. Anybody watching the show knows that. He was quoted as saying this in the Financial Times at the company's investor day. He said, "I'll be damned if we don't have record profits for the next year or two," when he was talking about regulation. So now he's not worried about regulation, even though he's been bitching about it time and time again that we've seen in the past. And then he went on to criticize some of the members in his audience, aka the media, saying, worse than that, you don't even make any money. I mean, this guy really has no shame or humility. Where does he get off?
Yeah. You're right. He cries and bitches whenever anything doesn't go his way, and then when things are going well for him, he gloats about it, throws it right in your face. He's like, you know what, baby? I don't need to care about you because I'm a freaking kleptocrat. I own your ass.
Yeah.
I don't care.
Yeah.
I can steal money from the bank, and guess what? If I go bankrupt, I don't have to pay.
Yeah.
You suck.
He's like,
That's basically his attitude.
Yeah, he's like, I get bailed out, you're a sucker.
Exactly. We're suckers because we work. He doesn't have to work. He just gets to rehypothecate all his garbage. And basically steal customer accounts, because that's what they are at this point. They're like, you know what? We don't even want to wait for interest to accrue. We're just going to steal money out of MF Global's customer accounts. That's what we're going to do, because that's way easier.
Yeah, the thing that comes to mind, there was a report that evidently the number of psychopaths in the financial services in Wall Street, 1 out of 10 are psychopaths.
You got 3 right here.
Whereas 1% of the general population are psychopaths. So I have to say, I'm sorry, but I feel like all of the evidence points to the fact that Jamie Dimon's a psychopath.
He's a sociopath, and so is Lloyd Blankfein, and so is John Corzine, and they're all sociopaths, and they should just be locked up.
Okay, and we're out of time. The new Goodfellas. That's all we have time for. Thank you so much for watching. Feel free to follow me on Twitter @Lauren Lister. Give us feedback on the show at youtube.com.